Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Let's take a look again at the euro currency and see what is going on currently here. Well, yesterday within the price action we didn't get as bullish bearish stop grabber pattern as starting of the Brent body sell trade, and that is the major moments current on the euro currency that makes us worry about the further direction of the price action, because when you see some clear setups on the market and a market doesn't follow the analysis, it means that something is wrong here, and that it means that we have the reasons to be extra careful with the possible development here. This is kind of the three period rule that suggests that if market will not start the move according to your analysis or according to the pattern that you see within the 3 trading periods, it's better to step out. It's better to close the position, because it means that something is wrong, and it means that market could fall in opposite direction. Here we have something of that sort, although we do not have any reasons yet take the position, because we didn't get any confirmed pattern. I just will show you what we have about the 3x3 and about the Brent body. So that was the third trading session of the Brent body. After this session, market should start move to the downside according to the Dreadnought framework. But we have the fourth day above the 3x3, and market even proceed higher above the 135 fib resistance, almost has hit the 50% level. The euro currency likes to do that, and currently we have the sixth day above the 3x3. So it means that obviously the Brent body trade, it's difficult to say whether it has failed or not, because market in fact doesn't show any acceleration to the upside as well. But probably this, we can't call it and treat it as the Brent body sell anymore. So since Brent body is the high probability trade that should start on the third day standing above the 3x3, but we didn't get this. We haven't got this from the market, and probably we can't treat it as the high probability trade anymore, high probability setup. This is not the Brent body already. Now, if we contract the chart from this point of view, this picture looks bearish, because this in fact could be treated as the rising pennant, rising wedge pattern. Here the price action is very tight, and the development on the upside looks a bit strenuously. It's a bit heavy, because market shows side by side and side sessions that is crossing the range very deep. So you can see that the range of this bar is takes approximately the 70% of the previous one. Here is as well. Here is in general inside trading session. Well, it's very heavy. It looks like the market is struggling with something when it's trying to continue move high. It leads to some deep pullbacks within the trading sessions. It's no acceleration, not free fly as here. Something is stand against it, so market just can't show any acceleration to the upside. Well, and currently this looks a bit bearish, but at the same time, as you can see, market has shifted trend to the bullish side. We do not have the bearish stop grabber here as we suggested. That is not the stop grabber, that's just the bullish trend confirmation. We didn't get the Brent body sell, and if market stands as heavy as it looks like here, why it hasn't started move to the downside? Why it hasn't started some retracement to the downside? That's the question. Besides, as we have discussed on the weekly time frame, this price action in general looks like the bullish engulfing on the weekly time frame chart. And in fact, market even could proceed move higher with this pattern. That's the things that we should keep in mind. Well, that's why I think that as market hasn't shown us the development that we have expected to see. This leads us to the conclusion that we need some more clues, some more confidence from the market before taking short position. And also take a look. Yesterday the market has formed some sort of the high wave pattern. This indicates an indecision. This pattern especially has some special meaning if you will take into consideration where this pattern have appeared. So take a look at the 4-hour time frame chart. On the 4-hour time frame chart, we have discussed this wide range candle, and we said that the high of this candle and low of this candle will take the significant meaning. And right here, market has formed indecision because, as I have explained in the previous video, the range of this candle has the special meaning, because if market will pass through it, it will mean that market has erased all this plunge down, and market will show the greater move to the upside. But if it will fail here, has shown this wash and rinse, this will lead market not only to these lows, but usually markets has the tendency to double the range of the wide range candle that holds market within the long period after that. If it will show the failure breakout and continue move to the downside, it could lead to doubling of this range to the downside. That's why the range of this candle, the bodies of this candle is significant, and they could play as the separate support resistance lines, especially on the higher time frames. That's just 4-hour time frame chart, but on the weekly time frame, for example, this could get really special meaning if you will see such great candles on the weekly time frame chart. Well, and now market has formed the indecision pattern, high wave pattern on the daily time frame. Also here we see some sort of the failure breakout. This is whether we could treat it as the wash and rinse or not. It's very difficult to say because this high is slightly lower than this one. This is not absolute wash and rinse, but at the same time, this you can see market has pierced the high of this candle. So whether it will be the failure breakout or not, it's very difficult to say. On the hourly time frame chart, we have discussed this action to the upside and has drawn this butterfly that theoretically plays as the reversal pattern. Market almost has hit the 1618 extension, but here market could form another one, smaller butterfly, and if market will complete 127, then probably it will finally touch the 1618 extension of this butterfly. So as you can see, situation on the euro currency is not as clear as we have suggested initially to get it, because we, as I said, haven't got the daily patterns. Now we have some unclear action on the lower time frame charts. In general, this price action looks very choppy, and that's very typical for the retracements. And if this retracement, then probably market should continue move to the downside. But at the same time, market now is showing some not quite understandable strength to the upside by just continuation move higher. That's why I suppose that before taking any position, since the situation has become a bit more difficult and not as clear as we thought initially to see it, well, I think that we will need some more confidence before taking the position. Particularly speaking, I prefer to see probably the breakout of this trend line, the breakout of the wedge that is forming on the daily time frame. That will get us two moments. First of all, if market will break to the downside, this area, this will mean that we hardly will see the acceleration to the upside, because as I said, sometimes market could show, when it showed the very tight action with some triangle and some wedge, then it could suddenly show the acceleration to the upside. Sometimes it happens. That will give us, as I said, some guarantee, some confidence that we will not get this acceleration if market will pass through it. Second, we will probably get in this case the failure breakout of this wide range candle on the 4-hour time frame chart if market will pass through this trend line. And finally, on the daily time frame, since this is indecision pattern, the value of this pattern is the top and bottom, and this is not the reversal pattern itself. But if market will pass through the low of this pattern, this will suggest some short-term decline of the market that simultaneously will lead the breakout to the trend line. So this will give us some short-term confidence that market probably will continue move a bit lower. That will be just safer to take the position after the breakout. If you still would like to anticipate this potential breakout and you would like to take the additional risk, but you're ready to take this additional risk, but you would like to get better entry point, at least wait when the market will complete these butterflies. That will give you at least something, some reversal patterns on your side that will let you to place the stop, understandable stop, and that at least could lead to some small retracement that will let you to move your stop to the break even, protect your position. That is aggressive tactic to entry. So that's why I think that it's a bit risky to take the position right now and just to see what will happen. I think that we should be focused on some more confidence from the market. That's really that we could take the short position and possess ourselves for the possible move to the downside. Since, as I said, situation is a bit unclear, I prefer to get more signs, more bearish signs from the market before taking any position. So you can see situation is not very fascinating here, not very impressive. Well, the market just going and going with this upward retracement, although in general it looks bearish, but we do not see clear signs of the downward, starting of the downward action yet. So it's better to get it first and to take position second.